Hello guys, welcome to the Trading Parrot. Bitcoin has closed the weekly time frame right against the resistance, and we are seeing some price developments that are turning faces. We are getting into the bucket 2 of liquidations, and things are starting to speed up as we speak. In today's video, we're going to analyze the healthiness of the move, the potential for us to hit the bucket number 2, along with some sketchy levels that are coming in the order book that could be hinting that maybe the CME gaps that we are forming over the weekend and on past Thursday might get hit before we know. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And thanks so much yesterday for all the likes. We got 3.7k views on a Sunday and over 600 likes, which is getting closer to 20% of likes. That's definitely pushing back the algorithm to show the content to more people, despite the fact of the shadow ban. And when looking at Bitcoin on Google Trends, we've been noticing that the attention is very low, but with these recent moves over 120k, it seems to be doing some new tricks. Let me show you. If we focus on this area very close, you can see that the bottom is rolling up and forming some sort of double bottom in there. And I will say once this point can take this point high is where we probably can confirm with more confidence. Of course, we need to see the candle settle because these candles over the week go up and down. Right now we are at 30, so let's say we get into 34 or beyond that, we could say we are getting a breakout in terms of attention in social media. Altcoins are also looking pretty good in this formation in here. This is either a cap and handle or an inverse head and shoulders with a neckline around 50 that could be hinting that we are going into the top of the range of attention with altcoins as well. All of that is promising, is not something that you can trade, but it supports a particular thesis, the bullish one, and in the rest of the video we're gonna bring some new data points. For example, Ethereum is looking more and more like BTC before the run from 10k to 60k. You can see it was in a symmetrical triangle around 2020, eventually it broke out and it entered parabolic area. That seems to be very similar, including this part in here where we can observe the fake out. That is the last time we went into 4K. Bitcoin did something very similar around here. It took a last dip and then it went parabolic. Let's hope that's the case because that's really gonna benefit my bags on Ethereum. Glassnode is saying that since Thursday, BTC made a new all-time high in USD terms each day except for Saturday. Today's high is 122.8. BTC is still shy of all-time highs against the Swiss currency in gold terms, but versus gold, it's now at the highest level since early February, after outperforming consistently since June 2022. They are comparing it with many forex assets. For example, here we have the Turkish lira that, of course, every day you get an all-time high, pretty much even in the bear market with Bitcoin against the Turkish lira. And against gold is -10, against Swiss currency is less than -1%, and the drawdown against everything else is 0, so pretty much doing really great at this point in time. If we focus on the performance of Bitcoin against the ratio with gold, which you can do by dividing Bitcoin by a XAU, you're gonna notice something that we are doing something very similar to what we did in 2021, which is a revenge rally that manages to reclaim the lost support around October 2021. At that point, the price of Bitcoin is about to put the final all-time high of 69k. Then we print some bearish divergences and then we enter into a bear market. And since we are doing the same, we got now the option to decide whether this is going to be the last nail in the coffin with an exit lower against the gold, mimicking this move in here, or there is a chance that the chart might be wrong or we might be looking at it in the wrong way. And let me give you just 5 seconds to see if you can spot the main difference between this pattern and these past 2 patterns, including the ones from previous cycles. The main difference is that during this cycle, we have never been at the top of the range. Voila! In this cycle, we went into 96, this cycle into 99. In 2021, we made it to 90, almost 91. And this cycle, the highest it's been is 72. So that is a little bit of too much acceleration to the downside for being the final pump. So I'm just gonna be the devil's advocate here, play the role. Imagine if this time, instead of just doing this disappointing move to reclaim and then lose it, imagine if this point went straight up, challenging this bearish divergence, and it hit the top of the range at 81 point something. How will that look in terms of price? What if we are all wrong and this move in here doesn't resemble this, but indeed it resembles one of these moves that go to the top of the range? Fair enough. Let's have a look. That will bring the price of Bitcoin to highs of 75 in the ratio. But that number is not going to tell you anything. After all, I'm dividing the price of Bitcoin and by the price of gold. But we can at least say something. From the lows of 9, we've been into now highs of 36. Let's call it around 40. And this highs in here at 73. So we could say that there is still half more to do, because 36, 35 by 2, well, you get to 70 something. So a little bit more than half, or let's call it a 2x plus. At the current price of 120, that will turn Bitcoin into over 200K if we manage to achieve this specific hypothesis. And there are reasons why I'm starting to believe that something is not going to play out like previous cycles. Particularly if you look at this is already something, right? It's on the 2-week time frame. We need to close this particular 2-week candle to confirm it, but that is already breaking a specific trend. And we also have the potential for the RSI to twist the arm for the first time of a descending channel that is already in bearish divergences and break out at this late stage of a topping year, which is definitely something unprecedented. We have never done that in any other cycle. For that, Bitcoin, literally all it needs to do is this or next week to carry on beyond 120, get into the next levels in here of 130 plus, and at that point we will have already broken out. At that point we come back down for a retest, and potentially we could ignite something really crazy that I wasn't expecting. If we do so, we also start breaking the diminishing returns, because we did in here 3 Fibonacci, in here we did less than 1.2. Now we can go into 1, into 1.2 again and get into 150. That will be really crazy. All I care now is that since I'm holding a lot of Ethereum and I handle a ratio of 0.05 for Ethereum versus Bitcoin, so if Bitcoin gets 100K as the top of the cycle, then I expect Ethereum to make 5K. If Bitcoin makes it to 150K, well, then I'm expecting Ethereum to get 7.5K. The only thing I need to be very careful is with picking my areas for adding up to my short that is currently hedging my spot positions. We got a little bit of a bearish tweet in here. The great Martis is saying the cattle believe Bitcoin is the future but fail to see it's a Nasdaq ETF pumped by elites in this orchestrated bull market. When this music stops, books shall be written. Enjoy what remains. Hope this helps. And you can see the Nasdaq in here, the composite one versus Bitcoin, and how Bitcoin is mimicking the moves of Nasdaq at the moment. Remember that Nasdaq is heavily influenced by the large caps at the moment, including Nvidia, Apple, Amazon, Google, and the rest of the Fantastic Seven, or whatever they call them now. Axel is always bringing fresh information, very useful, and in this case we are looking at the Bitcoin futures open interest net position. Bull dominance is on the rise. Net long positions in Bitcoin futures on top centralized exchanges are approaching 100 million. The price is holding firmly above 120K, and buyers have every chance to push the market even higher. You can see that with every move up, how this oscillator peaks, and at the moment we still don't cross the 100 million mark. So nutshell, what he's trying to say is that there's still room to go up. Bitcoin creator Satoshi Nakamoto is the world's 11th richest person in the world. I've seen how people are now speculating how much Bitcoin needs to go up so he can even take Elon Musk as the richest person. And I think it's over 240k Bitcoin, and that will do the trick. You can say whatever. I love Bitcoin. I love the technology in general. I do not like this hair in the soup. I do not like that there is one person that created this and suddenly disappear. I'm a paranoid person, so I don't like the idea that it can get rug pulled at any point in time. And the highest the price goes, the more I believe that that is a risk. I just hope that he died and he put the money in a wallet and that wallet disappeared and is never going to be attacked with a quant. I don't think that there is any person on earth that will be sitting on this pile of money and not thinking eventually to take profits. Of course, it will be difficult. There will be a lot of taxes and it will destroy for a long time the trust on any sort of crypto, but that is just my own idea. We got 3 important news to cover today. Of course, Bitcoin tops at 120k for the first time. That is 8 out of 10 bullish. But then we got the White House waits firing the Fed Chair Powell over $2.5 billion HQ project. This questions the Fed independence just as rate cut timing hangs in the balance, raises policy uncertainty premium for stocks, bonds, and crypto. And this got me a little bit confused, so I asked what makes it specifically bearish, because of course you can read this news in multiple angles. If it's just to do with the rate cut, in short term, rate cuts are typically associated by the vast majority of the people as something bullish, so how can it be bearish? I know the answer, but I want to know what ChatGPT thinks about that. And there are 3 aspects the Fed independence worry, specifically whether politics can twist the arm of anything and affect the stability of the macro. And also the cut can be interpreted as there's something broken that needs fixing urgently. Remember those charts that show the rate cut? As soon as it comes, there is a dip usually because it comes in at a time when something is really broken. In this case, Trump, of course, is pushing for it because he says there's nothing broken. We don't need those rates so high. Personally, this is not politics. I believe that the rate cuts that Trump wants are all a matter of ego. He really wants to deliver the message, and he has already done this weekend, saying that under his administration, he managed to get Nvidia to put a new all-time high, the S&P and crypto, Bitcoin and everything. All of that is thanks to him and to the tariffs as a way to support why he's doing that and why it's so successful. What scares traders is not where the rates end up, but how predictable the path is. Losing confidence in an impartial Fed adds uncertainty to every forward-looking model. Earnings, inflation, discount rates, so many multiples compress. In terms of the aggregated open interest, we are putting a new all-time high just like with the price, at this time at $41.5 billion. Remember, we have the 1618 sitting at 45 billion. That is the target that mimics the previous performance. So in theory, at that point, it should stop. But in the video on Sunday, we spot this inverse head and shoulders that we have in here that also points to 53 billion. So I've got in my eyes those potential 2 alternatives for becoming the next local top of the open interest aggregated across all the exchanges, which could top before the price, after the price, whichever is the option. We can make some really great calls using that. We are now in July over 10%, in fact 14.1% and accelerating. And over the weekend we put a CME gap at a premium of 118,600 that corresponds on Binance with 118.2. Remember that we have already placed this CME gap. I was speculating during the video on Sunday that we could form all of this as a gap. And precisely that's what we are doing. I ignore if we are going to go immediately to fill the first gap or the first and the second. and I'm dubious now to add at 122 to average up, so my exit is in profit at 118, or just leave it like this, and if we fill the first one only, I'm still in red. The thing is that there is a good chance that we go slightly higher because we have this long-term liquidity at 126. We managed to get into 123, so that's 3K away from the price, making me think that maybe we don't go to this one immediately. Maybe we wait a little bit longer. Also, let's look at these orders on Bookmap. We got a very chunky, the biggest support level we've seen in 6 months, I can say. This is 3,000, guys. 3,000 sitting at 114K. That is mental. And the price seems to be coming down now in here, so I wonder if they want to catch and fish that move down. My average is sitting right at that point, so at that point it's gonna be really tough to decide whether to close at break even. If we go there, of course we don't know if we're gonna go there. This amount of support usually affects the algos, because algos are gonna see the bid versus ask ratio, and they're gonna see so heavy support sitting at 114 that maybe they're gonna go much more bullish in their entries. The Bitcoin status is now updated. We reached the global resistance on the 4-hour for the second time, and the daily is getting closer and closer to that 85 RSI. We got new all-time highs on Monday. The weekly resistance is being tested. Let's have a look at the 4-hour time frame. I have updated all the levels. You can see that we are heading to the first fair value gap at 121 at the moment. Yesterday on Sunday, I say monitor what the RSI is doing in this area of the squeeze. If we break out in this direction towards 72, we could pierce the top once again. When we did that, the price was sitting at 117, and that moved up 4% up to hit that 85 once again. Now we have this white line of support in here that we are approaching very fast. Once we get to 75.96 on the 4-hour RSI, we are going to be challenging the first line of defense of all this bullish move that starts from the 8th of July. That level corresponds with this white line in there that is 121,600, which has already been pinched, and we bounce off back up. So the battle is at the moment being played. If we lose that white line, we could be heading into the green. I place it at around 59, but it could be even at 54 depending on the speed of the move. If it's slow, we could meet with that support at 119, but maybe slightly lower at 118 if it's sooner. Then we got the yellow support, which is currently the global support on the 4-hour, sitting at 51 and at a price of 117. So even if we go into the global support, I'm still not in profit. If we went into 51, I'm probably gonna think, well, I should have add at 122 and average up so I can exit in profit at support. But I already did at 118, so I'm looking to add beyond 125 or towards 130, and that is because we have this bad boy in here sitting at 2, and we have number 3 as well, and we still are not anywhere close an area of a distribution yet. So adding and adding and adding like a maniac with my small position, I can do it, but I wonder if the people in my Patreon are gonna be able to do it, because when I say small position, I just say small. But well, some of them, given my win rate, are gonna go heavier and they might run out of funds, which is something that people need to consider. I am very conservative, so you should assume that I take these things very easily when it comes to position sizing. And when it comes to the cross-V ratio, you can see that we are above the red line. So on the 4-hour, things have speed up really crazy. Look at this. We went into the top of the range and we went again into the top of the range on the 4-hour. That is the typical behavior of low time frames RSIs when you're putting an all-time high and another all-time high and another all-time high. All of these signals are signals to sell. So this is more or less how it looks to be in banana zone. CPR is getting close to the top resistance at 125. At that point, we're going to start seeing long-term liquidations number 2 gone. and the RSI on the daily now is at the same highs as we were on the 22nd of May. That is 78 RSI, and there's just a few points to get into 85. Once we get into 85, that is the 5th time that we reach the top of the range in the whole bull market. 1, 2, 3, 4, and 5. Notice that every time we get into one of these occasions, price carries on going higher at the cost of bearish divergences. Once we put bearish divergences, for example, look no further than 4. 4 started printed at 88k, and then we carry on into 108. That's 20k beyond the top of the RSI. So if you were to average up a short and you hit 4, look at the RSI. What levels of RSI would you prefer to average up the last time? Think about that. Just pause the video. It doesn't hurt to spend 5 minutes trying to think it out loud. Then I'm gonna tell you my own answer. If I was a crystal ball reader, I will say that I will average up first at number 4. Why is that? Because sometimes the top of the momentum is the top of the price move. Sometimes, not always. So I will play with that as an initial decent scale up. That is my preference. You can say, no, I'm not gonna average up at the top of the range. I'm gonna wait until this beast starts bleeding down. So you wait until the momentum starts coming down, finds the line of support, which is on the 10th of December 57. You wait for a bounce of support, and this is the dead cat bounce. That number 1 is at the cost of heavy bearish divergences on the daily, and at that point an average down seems to be the best performing one, right? That is the top, and then you come back down and you build bullish patterns for continuation. So the answer is either top of the range of the momentum, or when momentum starts confirming a channel down. You could have missed this one, number 1, and you wait for breakdown, and you wait for revenge rally, which could be this point in here, or the number 2 when you hit perfectly again from below the lost support. So let's say this rally is heavy and in the next few days it does this, then it could do it again, let's say super bullish, and then it starts doing something like this. So where would you add to the short? Of course, everything is very uncertain in trading. This is just based on past performance and probabilities, but nothing says that from here you cannot do this. Yeah, you can do it. It's very low likely, and it's way less likely than another top in here because you are already in a channel down. So I will say if you are in here, each of these tops are areas to scale up if you are seeing that the price is going higher and the momentum is reaching pivotal moments like this. Of course, it's easier said than done, but that is my opinion. So on the daily, we have also levels to watch out: the 85, the support at 70, then the final support at 45, and the go to hell level of 25 that is currently sitting at 81k. 45 is at 180, which is when we manage to break out finally out of the top of the range. 70 is very close to the price, it's just 118 or 119. On the weekly, we continue with the move. We close the weekly with a volume that is, pretty small. We still cannot cross the moving average on the volume. The RSI weekly now has hit 71.85, which was the first target on the weekly that we talk about. That is the yellow line at 122.2. If we break out from that and we do something really unprecedented relative to these channels going down, the next target is 77.48. That is priced at 137k. The monthly is looking fantastic. Green candle larger than the previous ones. We need to close July like this for continuation. And leverage squeeze is making me look really bad in here with these two really bad performing signals, which can only be explained now as we are in banana zone, because pretty much throughout the whole bull market, every time that the trigger, there is a decent drawdown. But since these lows of 74, I have noticed that there is very little time that you are in profit. This is the only exception that went 7% down, and this went 2% down. This went like less than 2, and this again. Bitcoin SOPR is not really in an area of profit taking, at least not yet, but Ethereum is approaching very close these bands in here, so watch out once we get into prices of 3.2, 3.3, particularly if we see an acceleration on the SOPR. Remember that in any post on my Telegram channel, you can join my Telegram channel with a link in the description. Do not join with any other link on all internet. They are all scams. Only the one in the description is the legit. And you can find in any post on Telegram something that says charts. You click on that and you can always request an up-to-date version of any of the charts that I'm showing in these videos, including the 4-hour time frame and the status of leverage squeeze. I see people all weekend checking the charts, which you can check 2 per day for free. Long-term holders in this particular chart don't look like they're doing anything, and that was always the case before. All I care is if they do something like a heavy distribution like in this area. At that point, we can start thinking on averaging up the short, or if you're a long, you can start being skeptical about the potential for price to continue going higher, particularly if it's a sustained move down of long-term holders, because at that point you know that they are distributing into short-term holders that are going to end up inheriting a red bag for long-term. This particular chart gives us a much more reactive view of what they're doing. Notice in here, for example, they were in heavy strong accumulation. You can read the annotations on the left-hand side. The heavy accumulation ended in here at 60 something K, and they started the distribution immediately as the price goes up. Their peak distribution was at 100K. Price went even into 105, but at that point the price becomes shallow. The bearish divergences all over the place across all the time frames, and then you see the price come back down into 74K. So watch out for this peak. We are still very far away from being this high in long-term holders distributing. So there is not even a yellow warning, but let's focus on what they're doing now, right? So we are at this stage, we could say, in terms of long-term holders, what are they currently doing? After they've been at peak strong accumulation, now they're starting to distribute. These guys don't sell in one move. They sell by DCAing out as the move starts going up. And that's what everybody should be doing pretty much. They accelerate with the price acceleration, and eventually they reach peak distribution, and then they go back into accumulation in that way. We are in a period of shorts being liquidated. Now we are at minus 14%. Last time we stopped the liquidations of shorts at minus 16. So from the point of view of this indicator, anywhere from when we are into minus 20% is typically where we reverse the season and we turn it into a long liquidation season. Last time we flipped was at minus 17. Now we are at minus 14 or minus 16.6. This was minus 17. So very close to the previous one indeed. Let's zoom in. 15 and this is 16. So 1 more percent and we are at the same level. It doesn't need to be the same number, but you know when you're getting closer and closer. Same with the net taker. People entering into the market at any price without a limit order is also accelerating in here. Areas where you need to start getting worried that you're entering distribution is when this flips into heavy red. Heavy sellers slow down the move up and build a local top. We still don't have any red apart from this red that we had that already got completely liquidated those shorts. And no signs of spot dominant move in this case. So it's a lot of speculative move what we are currently having. That aggregated open interest is running really hot, guys. And on the open interest percent change oscillator, which we use more for scalping or short-term trades, we are now above the blue line at 14%. Last time we peaked at 17% in these highs as well. Notice that during a pump, yeah, you can pinch it multiple times. And during a pump, during banana zone, every single time you go into the red is a great area to add to your long and ride it up until you get into the distribution area. Interesting that we are still not in the extreme greed. We are still at 74 with prices skyrocketing. On Sunday, we settled the golden cell and the warning cell signal, so keep that in mind. We ran out of all the short-term liquidity. There's no more short-term liquidity at the moment. We have only long-term liquidity. That probably happened as well when we were in the area of 1 and going into 2 in 2024. So now we need to rely on a move into 125 to carry on finding the next top. You can also confirm that from liquidation heat map. There is just this that is appearing here at 125, and that's it on the 1-year chart. After that, we are only gonna find 83K as the heaviest pull in the year and also on the 6-month chart. In the liquidation map of the past 30 days, we can see 106 being the biggest liquidation. I am not counting on getting there with my short. I think it's gonna be in drawdown in the red for a little bit longer because I don't have any signs yet for a big cool down, at least not the ones that typically trigger in bearish divergence and obvious distribution. Of course, you can always have a blow of top, so watch out for that too. A blow of top doesn't tell you with anticipation the bearish divergences and all those signals. It simply goes to a price, it pops, and it comes back down sharply, hitting a cascade of stop losses coming down with drawdowns of 40% in a single second. At least that was happening in 2017. It didn't happen in 2021, but nothing tells me it cannot happen right now under the right stimulus. We got a new big liquidation in here. We were expecting to get big liquidations across all this period. We got 1 billion. That was on the 10th of July, and now on the 14th of July, we're getting half of that with $500 million, at least so far for the day. The 120 resistance that was placed with $100 million was rug pull as soon as we start the move on Sunday. Remember yesterday on Sunday, I told you that we are sitting right underneath the leftover of the short-term liquidity. And if we are going to have a move, it's typically going to start with the end of Sunday into Monday. Bitcoin did that a lot in early times of the beginning of this bull cycle. Every Sunday, we were getting pumps that were completely coming out of nowhere. Purple whales were part of this move. That is something that looks promising, but now they are pointing down. There is a slowdown as we approach the market open. The breakout from the bull flag was perfectly validated yesterday, and it went to the next target. Interestingly, I don't see that level of support that we found at 114 on Trading Light. Let me see if it's still on Bookmap. It's definitely still there. So this is a combination of Binance Futures, Bybit, OKX, and BitGet. That means that the order is not in Binance. It must be in one of the other exchanges. Let's see if we can find it on Market Monkey terminal. Nope, I cannot find it in here either. And yes, there is an order at 114. We can see it in here, and it's got 3K. So that is confirmed. It's located at 114,440. Crazy. I think it's located in Coinbase. Very interesting. I think I found it. Let's go into high block capital, and we can see that the 10% and the 5% are being now very defensive. There's a lot of limit orders between the price and 10%. We are at a percentile of 97. So that support is heavily concentrating within that deviation of 10%. Whereas at the deviation of 1 and 2, we are at a humble 58 and 46 percentile. The 5% has a 62, which is something, but far from 97 percentile. That means that is the biggest it's been in the past 2 weeks. And we are skyrocketing in the delta with longs being at risk. That is pretty much what you get when you are in banana zone. Longs are still very low and funding rates are moving up. We have a huge body of fair value gaps from 122 all the way to below 90s. And it's this one in here that attracts more my attention. Of course, at this point, I am already in profit if we get to the fat one. If we just go into a humble move down up until 117, I will need to average up at the highs of 123 or 125 to get here in profit, but that grows too much my position in case we go beyond 130, and this thing still hasn't slowed down, not a little bit, while at the same time we are seeing in here this potentially weekly breakout completely against all the rules. All we need to do is be positioned for the consumption of these levels without getting liquidated, of course, while at the same time trying to catch the areas that are high likely entries for a long to also ride the wave up and continue to grow the account with small scalps or swing trades. And remember that the CBBI has grown a lot. We are at 80 now. The highest we've been in this cycle is 83. And of course, this model calls for getting very close to 100 to find a market top. Like last cycle, we get into 96. Notice that the actual all-time high at 69 was with a CBBI of 81, not with 100. And now we are at 80. So also something to consider. General markets are opening a little bit down, particularly the S&P is at 621 versus 623. The Nasdaq is a little bit in the positive, but not by a lot. And we got something very interesting happening with the dollar index. We have this breakout. It's a layer 3 breakout. Gold is hitting resistance right there that could bring a potential breakout on gold if we close like this next Sunday, or it could be a rejection with further continuation to the downside. So watch out on how we close next Sunday on gold is going to be really important. Notice how the VIX lost support, and this week, if it continues pointing up, it could regain support, hinting towards an expansion, which is something that is bearish for the market if it plays out. And since the altcoins are making news, you can see we are at altcoin season 35, which is the highest we've been since February this year. The past time we made it to 33, and it was a huge rejection. Before that, 31, even worse rejection back to 13. Of course, we don't want to go back down. We want Bitcoin to actually go lower in the ranking to allow for the altcoins to do something. And they are doing pretty great, actually. Thanks to that, we are printing an M pattern in this area, similar to this area in here. That definitely resulted in performance of altcoins. If we break from below this neckline, we could get maybe into 17, somewhere around here, maybe find support at the bottom of this channel on the RSI as well. That gives some headroom for the altcoins to continue moving up. Bitcoin dominance ended up the weekly close at the same low as 60. Things are looking still a bit toppy for Bitcoin dominance, which is great for the altcoins. But in this particular chart that we've been monitoring, the fractal, we are already at the area where we reach the target of expansion for the altcoins. So in theory, in here, profits should be taken and we should embrace a move up of the USDT dominance into bear market. So careful with this chart, but I have an upgraded version of this chart that still allows a little bit more headroom for altcoins to continue performing. For example, the total free can go into the top of this range. Is still looking very healthy. We have a close with a higher high, higher lows. The week is opening in a high, so everything looks extremely promising. Ethereum dominance close at the resistance, and this is the new model that incorporates stable coins dominance as a whole, not just USDT or USDC, but all of them together. And thanks to that, is allowing still some room to go lower into the support of 6%. Once we get into 6%, we are getting into the area where everybody gets wrecked in the past history, including the area of January 2025 that expanded back into 10%, causing the altcoins to go back lower and put new lows. This is promising because we are breaking down on the stable coin dominance, and that is hinting that this should still bleed a little bit more into 6%. I mean, I talk about 6% because in this particular chart, we have never broken below that. But if we break below this, well, we are in uncharted territory, just like we were with USDT, that eventually this broke down in here. But that was thanks to USDC taking a role in stable coins that caused this additional bleeding of USDT dominance. And that's why I'm moving into this one that aggregates all together. Guys, if you want to take advantage of my 30,000 welcome rewards on Bybit, find the link in the description for Bybit, open a new account, grab a $50 sign up bonus with that link, and help supporting the channel. Thanks so much for watching the video. I'll see you in the next one. Take care. Bye bye.